Hello guys, welcome back to another video. So today we're going to be talking about market dumps and what we should do as crypto miners. This is mainly for new people that are coming into the scene in terms of probably Ethereum or Kaspa miners that have picked up ASICs in the past. Or if you're getting into GPU mining, this video is probably the best thing for you because it'll tell you kind of more about profitability and how it works in terms of yield. So we know over the past couple of months we've seen dips from the crypto market. So normally it's Bitcoin basically tanking down and everything else follows it. You have here at around 70,000, goes all the way down to 55, 54, comes all the way back up to 70,000 again and dumps all the way back down to 49, which is actually the lowest it's been for a while, and then comes back up and we had a massive drop off here from around 65 down to 59, 58. And mainly as a GPU miner, a lot of the coins that you're GPU mining will be affected by the price of Bitcoin jumping down. And so what is the ideal situation? Because in GPU mining, the profitability isn't really there. And if you are profitable, then when these dumps happen, basically makes you unprofitable for a couple of weeks. And then you'll gain back profitability for a little bit and then it dumps off again, a couple of weeks. And so you're probably thinking you're not profitable right now, there's no point running the GPUs, or even if you are running ASICs, I don't think any ASICs are actually unprofitable at this range. It just matters more about the electricity price. 10 cents per kilowatt hour is normally what GPU miners look for, and then for ASICs you can kind of go up to around 15 to 20 cents per kilowatt hour and you'll still have profitability. It's not going to be great, but there's still profits to be had at those electricity rates. But with GPU mining, even in the past year or so, the main thing to do has been to spec mine. And that basically brings no profitability. So you're probably thinking you're losing more profits if the market dumps off if you're spec mining. But overall, in GPU mining, the main thing if you're going to be spec mining is to pay the electricity rates out of your pocket. We've seen this over the past 2 years. It works out way better to pay out of pocket for your electricity rates than to sell coins and pay it off. The price appreciation of those coins has normally been way better than the price appreciation of the coins that you sold off, basically. So you're losing a large amount of future profits if you just sell off those coins to pay for electricity prices. Now, it's not exactly the same with ASICs, but I'm sure it does track out into the future if you draw it all the way out. So for GPU miners, even when we look right here, you can kind of see the profitability is not great on pretty much anything at 10 cents per kilowatt hour. So you probably are going to be spec mining something and you are going to yield more coins when the crypto market dumps off. And subsequently, price appreciation should take in effect if you yield more coins and don't pay for the power by selling the coins that you mined. We've had examples of this when Kaspa moves over to ASICs or Ethereum moves over to ASICs. Those are two examples where the price appreciation from GPU mining over to ASIC has been relatively big. I think Ethereum was at around 19 cents when it transitioned over to FPGAs, and now it's at $1.70. So the price appreciation is basically 10x from GPU mining, and Kaspa coin, I think it's around 16x when the transition happened to FPGAs and then over to ASICs. But the main thing to focus on is not profitability and its yield when the crypto market actually starts to go down. So we'll show you some examples of why this is the case. Right here we have Ethereum Classic, we have Zealous, Dogecoin, Kaspa Coin, Litecoin, Ethereum, and Zano. Zano I've actually just thrown in there because I've seen it's starting to be slightly profitable than pretty much anything else, and the price of the coin is actually going up quite a lot. A lot of hash rate has also hit the network. So with Ethereum Classic, you can see, so the crypto market dumped off probably around a day or two ago, and the yield is already up within the week to 6.77, within the day is 1.44, and within the hour it's up 0.11. So you can see that the yield starts to increase very rapidly as the price of the coin jumps off, and that's mainly because people are getting off the network because they don't think it's profitable. And it could also be to do with nice hash, because that's going to jump from network to network. So you can take advantage of the yield instead of taking advantage of that profitability. And subsequently, prices do start to go up within a couple of weeks, and then you can sell those yielded coins for much more than you would have if you would mine the most profitable coin at the time through something like NiceHash or Unmineable. We see the same thing across the board kind of with Zealous. So a day ago, you had an 8% increase. Dogecoin is around 12% in the last hour. Kaspa coin didn't really have much of a jump, 2.43, but that's just because the hash rate is always climbing. There's not really much defending against that because a lot of hash rate is hitting the network right now. Litecoin, you can see here, 5.43%. Alephium had a massive yield, as we've just seen there, around 50% yield within the day, and then 16.94 within the hour. So you can see how when this yield starts to really pick up, that's when you're going to be yielding a bunch of coins. The biggest is for Alephium right now. You have 50%, so you're going to be mining 1.5 times the amount of coins as you were a day previous, which will obviously appreciate in price, and then you can sell it for more instead of just chasing profitability. And then lastly, Xano, I just thrown it in there because of the reasons before, but you can see within the day 1.49%. And when we look at the price of Xano, it has actually gone up within the week 45, within the month 71, and within the quarter 164%. So it's actually rising pretty quickly, and a lot of hash rate is hitting the network. So one of the best examples that I see of this is with Alephium right now. So the crypto market tanks off 2 days ago. The yield spikes right back up to 49%, so an extra 50%. But then if you look at the price, you can see that within the week, it's only gone up 16%. So you're actually yielding a lot more than the price has gone up. So in return, you're going to yield more coins against the price of the coin. So it's a weird metric to think about, but you can actually sell that off for a lot more if the price is also rising whilst you're yielding this amount of coins, so 50%. And you can kind of work that backwards as well in terms of Litecoin, like we see here. So it's up 5.43% in 1 day, but the daily price has only dropped 2.8%. So you're basically yielding a little extra more than the price has dropped off, which means that you could actually sell at a profitable rate if you're yielding 5.43% more coins. The price has only dropped minus 2.8%, so there's a margin of around 1.8% within there, and you'd actually make a little bit more profitability. And we can kind of see this across the board. Kaspa doesn't really track. Dogecoin, you can see within the hour 12.56, but it's only dropped in price 0.77. So the yield is outweighing the price, and you'd actually be slightly more profitable right now than you would have been a day ago at minus 10%. Same thing that we see with Zealous here. You have 8% within the day, but within the day it's only dropped 1.12. So you're making a little bit more yield, and then obviously you can sell for more profitability. So across the board, when that yield actually comes in, you become slightly more profitable on a range of coins. Some of them are just going to be straight unprofitable, and the easiest way to kind of look is to look on hashrate NO and look at these kind of charts, like price to yield type of charts. And you would actually be able to make a little bit more profitability within those times where the crypto market actually dumps off. And profitability is obviously good for all of us crypto miners, and we want that profitability to continue to crypto mine. Now, Alephium is a massive example of it, as I said, but there's also other things like the transitions over to ASICs hitting the network, so that might have spiked the price up, and certain things, but the rest of them, they do kind of track on that. So overall, if you are going to be mining and you are going to be switching your mining farms off in terms of GPU miners because the profit margins are very small, it might just be better to go for the yield and actually collect more yield to outweigh the price drop that you're seeing. As I said like 30 seconds ago, the best way to do this is to just keep track of the yield versus the price. And as long as the yield is higher than the price, I believe you should actually be slightly more profitable than where you were before because the price hasn't dropped as much as the yield. And all of this happens just mainly because people are coming off the network because they think it's going to be unprofitable. And when those people come off the network, you have like a baseline of hash rate that is going to stay on the network, and then that baseline hash rate does become profitable because more people have actually jumped off the network. It's an interesting thing to think about, but if you are new to GPU mining, ASIC mining, FPGA mining, even CPU mining, it probably works out for, then crypto dumps is a chance to just yield a little bit more and also gain a little bit more profitability, depending on obviously your power cost. If you're wildly unprofitable, then I wouldn't recommend it. But if you're at the 10-cent range or even a little bit lower, then it could be good for you, even if you're GPU mining. I know ASIC mining is kind of very, very profitable in terms of Lithium and Casper coins, so it doesn't really matter too much, and people are going to keep running that. But it's just an interesting metric to look at. Let me know your thoughts in the comments if you kept mining through this kind of dump off and through the previous dumps of crypto market. Make sure you like the video and subscribe for more content like this.